There we go. Okay. All right, we're going to try the new lecture capture software and machine that I got. And so sometime today, I'll have this lecture uploaded on Blackboard under the Chapter 4 so that you'll be able to look at it. And in the future, I will, because I'm going to try it again tomorrow with what it looks like on a tripod. And I've got 3 sections. So in the future, what I'll be doing is after the Tuesday, Thursday class, I'll pick the best of the 3 lectures, and then I'll post that, and that'll go on there so that you'll be able to look at it to your heart's content. All right? So the first thing I want to do is the homework has been graded. This is some screen captures out of the homework to kind of show you what I'm dealing with initially. And it's the first one, so I expect improvements over the semester. But you can see we've got like the sum of v, 13, 18-21, on and on and on, or the big plus, 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 another plus, plus, plus. This one's my favorite. What you're trying to do with these sums down at the bottom is to see whether your credits equal your debits. Well, if you make the credit column equal to the debit column, yes, they will be equal. But that's not what you're supposed to be doing here. Here's kind of a mix. We've got the colon with a range, but then we've got a comma in there. Here's one that, yes, it works. You're going up to the adjusted trial balance and you're bringing down the various, cash, accounts receivable minus the allowance for doubtful accounts. But it's some run amok on this one. So you don't need to do all that work. Oh, this is the one that I warned you about. I don't want Excel to be used as a typewriter. So don't use it as a Word document. Here's the correct way. Use a range, and use a range independent of the debits and the credits. Because once you get this range set, once you have the sum of T11, which is the beginning of the range on the adjusted trial balance, to T48, which is the cell right above this, you can just copy that to here. It would take you less keystrokes to copy this formula to here, because this is a Control-C, go right to Control-V. So that's 4 keystrokes. Then to go over here and go equal over here and then hit enter. It's easier to do it this way. So anyway, that's where we're at as far as a baseline. So you'll see the grading, and if you've got questions on the grading as always, or you think I have unjustly graded you down, then feel free to come in and state your case. I'm pretty flexible on my grading. So just let me know, okay? All right. I want to finish Chapter 4 with a whole series. I'll do one problem on the board, and then I'll do one problem using an Excel template, which is similar in nature to your homework problem. So we'll start with one on the board, and we're going to start with exercise number 7, which is on page 52. All right. So on this one, the December 31st balance sheet accounts for Height Company are shown in alphabetical order. And it's asking you to prepare the December 31st balance sheet. And we're, in this chapter, all doing classified balance sheets. So this is classified balance sheets, if you recall from last Wednesday. has 4 primary sections in the assets section: current assets, long-term investments, property, plant, and equipment, and intangible assets. In the liability section, you have current liabilities plus long-term liabilities. And then in the stockholders' equity, you have contributed capital and then retained earnings, or just earnings, which could include other comprehensive income. All right? So that's where we're at. So it's in alphabetical order. As always, you're going to start with a 3-line header. The name of the balance of the financial statement. And then the date. The balance sheet is the one exception. It does not measure activity. So it is not for the period ending. It's not for the month ending, for the quarter ending, in this case for the year ending. It's a picture in time. Assets. In the first section in a classified is current assets. Current assets are cash, what you're going to turn into cash, what you're going to sell, and what you're going to use up in the next 12 months or an operating cycle, whichever is longer. This also is the one under U.S. GAAP, the only one in this balance sheet that has a specified order. Does everybody remember what that specified order is? Liquidity. How close to it is it to cash? So by definition, it's always going to start with cash. And cash has a balance of $2,900. So the next on this list of something you're going to turn into cash, that is the next most liquid asset. Anybody see it? That'd be the third. There's one right before it. No. What did you say? No. It's similar to stock. It's in the left column. I mean the right column. No. Marketable securities. Short-term marketable securities. By short-term, management has the intent of selling these marketable securities sometime in the next 12 months. So marketable securities is next. And they have 6,100 at their current fair market value. Because marketable securities that are held for available for sale or trading securities, either one of those, are written up and written down to their fair market value at the balance sheet date. Then we go to accounts receivable. And we have 21,500 of accounts receivable. But from that, we need to subtract a contra asset account that is related to accounts receivable. The allowance for doubtful accounts, precisely. And that's $800. So the net of that is $20,700. That's the net realizable value on accounts receivable. So this is everything that is cash or what we're going to turn into cash. Next, in order of our liquidity, is going to be inventory. And this is not a manufacturing company because it has a single inventory account. So it's either a retailer or a wholesaler. Inventory totaled $37,200. Which gives us total current assets of $66,900. Property, plant, and equipment. The only investments this company had was the marketable securities, which were short-term. So they don't have any other long-term investments, which would normally come next in the four possible sections of the classified asset side of the balance sheet. So property, plant, and equipment.
That's considered under long-term assets, right?
It is a long-term asset, yes. But it's not a separate section. Whereas liabilities have current assets and long-term liabilities, the asset side has current assets, long-term investments, property, plant, and equipment, which are tangible assets, and then intangible assets.
So if you're writing it on one sheet of paper, that would just go underneath the current assets?
Underneath current assets, absolutely.
That's what I was thinking.
Yes, sure does. Land. So 20,000. I'm sorry, thank you. 30,000. You know, when you get old, your distance, your ability to read goes away. Then it has buildings. Which were 144,000 less its contra asset account. Correct. Which the problem gives you is 53,000. So that's a net for the net book value of buildings of 91,000. And then lastly, you have equipment. $72,400. That's its contra asset account. $35,100 for a net book value in equipment of $37,300. Add all that together, the land, the net book value of buildings, and the equipment, and you get total property, plant, and equipment of $158,300. And then the last section is intangible assets. These are assets that do not have a physical substance that are held for long-term purposes. And we have two of them. One is the patent, and the patent says it's at net, which means the value that is given there of $9,800 is net of accumulated depreciation, which is how it is commonly. Yes, sir.
How come marketable securities don't go under intangible?
Because we've used them already, and they told us in the problem they were short term.
Oh, but if it did tell you that it was short term?
It would be an investment. It's not an intangible asset, even though it doesn't have physical substance, but it's an investment of some sort. It's a purchase of stocks or bonds in another company. So patents net. $9,800. And then the other intangible is a trademark. $3,700. That's a total for total intangible assets of $13,500. Which gives us total assets of $38,700. $238,700 for total assets. And because it's the end of this section, half of the balance sheet, we've double underlined to let people know that there's not more assets on the next page. Okay? So we've got 3 of the 4 sections in this particular example, this exercise. Current assets, property, plant, and equipment, and intangibles. The only one that's missing here is long-term investments, which would go under current assets had they had some. And the next problem that I'll do using the template will have an example of that, so you'll get a chance to see that. All right, has everybody got this? We're ready to move on to the liability plus stockholders' equity section. Has anybody not got this? Should I let the camera scan it somehow without me walking in front of it? Let's see. So we got that section plus this section. Hopefully it's readable. I have no idea if it's readable or not, which will kind of defeat the purpose if it isn't. Huh?
So unless you upload that somewhere and delete it from your phone, it's going to destroy your memory.
No, it's there. I don't expect it to be too off with that. I got lots of memory on that phone. All right, liabilities. This in a classified balance sheet has a possibility of 2 sections. Current liabilities, everything that is due and payable within the next 12 months or an operating cycle, whichever is longer. So current. And while this doesn't have any specified order, the most common way that you see it presented is either in inverse order from the highest amount owed to the lowest amount owed. Sometimes you'll see this in alphabetical order, or just traditionally, they always list accounts payable first. $22,400. Then we also have current taxes payable. $10,400. And then we have a salaries payable. $2,000.
On other ones,
Mm-hmm.
if what if you were selling like you had a plane salesman who, usually it took longer, and you got paid on commission.
Right.
Would that still go under commission?
Commissions payable.
Commissions payable?
Yeah. Traditionally. Yep.
Why is salaries payable?
Not paying your people very much, and maybe the pay period is only 1 day in the last month since they last got paid. So. All right, so this is total current liabilities, or total, yeah. And that is $34,800. And then long-term liabilities. Here they only have one, bonds payable. And that one is to mature in 2021. So the bonds have $77,000. But the bonds have a contra liability account. Anybody pick that out? It has a discount on bonds payable. If it was a premium on bonds payable, it would be an adjunct liability account. It would be adding to. But this one is subtracting from because it's a discount.
Mr. Norris?
Yes.
It's 2024, not 2021.
20. Oh, okay, good. My answer key has 2021 for some reason, so 2024. Thank you. So less discount. Of $6,900. And that gives us a total long-term liabilities of $70,100. Add that $70,100 to the $34,800 of total current liabilities, and you get $104,900 as total liabilities.
You underlined it twice, right?
No, because this section is continuing on to stockholders' equity. Good question, though. So this does continue to stockholders' equity.
question.
No problem.
When we first made, you said the 3 lines for the balance title.
Yes, the 3-line header, the name of the company, the name of the financial statement, and the date.
But in the book it says December 31st.
Right?
But we wrote December 30th.
No, I'm pretty sure I wrote December 31st. Did I write December 30th? Did I? That was a mistake. Thank you. Yeah, no, December 31st is the date.
Okay.
And it's 2013 is what you wrote.
That,
It's 13.
it's 13. Should
Oh,
be.
you wrote 13?
Yeah.
Sorry.
No, sorry.
Yeah, no. That's not a silly question.
We were like kind of backdated.
No. It should have been the exact date that the book gave you. So stockholders' equity has 2 possible subsections, and that's contributed capital. So this company has a complex capital structure. It has more than it's just common stock being issued. It has preferred stock. So we'll list that first. Preferred stock has a $100 par. And then common stock has a $10 par. There is additional paid-in capital. On the preferred stock of $11,500, and then additional paid-in capital on the common stock of $24,000. So total contributed capital is $86,500. Retained earnings is given to us in the problem at $46,200. And then when you approach problems like this, as you use an account, put a check mark, a tick mark next to it, or line through it to make sure that you've used all of the accounts. And if you'd have done that, you'd realize there's one account left, which is the very last account in the right column. It says unrealized income in the value of marketable securities. So this is accumulated other comprehensive income.
When did we use salaries and expense?
It's not on the balance sheet.
Okay. Okay. I thought you were saying that we were going to use that line.
Yeah. And then That was $1,100. That gives us total shareholders' stock equity of $133,800. Total stockholders' equity. Add that to our total liabilities of $104,900, and you get the same $238,700 that we had for total assets. And this is total liabilities and stockholders' equity. Isn't that fun? Piecing together a jigsaw puzzle. Questions on this one?
Shouldn't they have used salary expense to get the retained earnings from the income?
Now, because it gave you the retained earnings on this one. So, yeah, they just gave you all the balances on this one, so you didn't need it. It was just extraneous information. All right? Okay. Has everybody got this? We'll go back to the screen here for the rest of it. I think what I'll do is I'll put this here. No, too far. Put that there, and then you'll be able to see the screen, what I'm typing on the screen rather than watch me. Because it won't do you much good to watch me on this one. Okay, problem 4-14, which you can see up there in the top corner there. 100%. Put down just a little bit more. There we go. Okay. All right, on this one, the following is an alphabetical listing of stone boat companies' balance sheet and accounts and account balances on December 31st, 2013. It's not, but your homework has a template. All right? So under the homework assignment, you have a template of similar nature to this. And I also did problem 4-10, I think, is my example. So I have a recorded example that I did online also. So you'll have the best of all that. So it already is giving you in the template here the 3-line header, Stone Boat Company, the balance sheet, and the date of the balance sheet, because it's not measuring activity once again, of December 31st, 2013. So from here we have current assets listed in order of liquidity again. So cash, accounts, put that balance in. That's $13,800. They have a note receivable here. Now, as far as liquidity goes, note receivables have a higher liquidity than just accounts receivable. Accounts receivable are trade accounts. They're handshakes. A note receivable is a legal document. It is got a promissory note that backs it up. You can take it to court and collect it. So it has a higher amount of liquidity. The note receivable totals $17,000. Then it has accounts receivable. Of $37,100, and its related allowance for doubtful accounts, which has $1,800. The net of those two, okay, thanks. The net of those two, I didn't put that in as a negative, is $35,500. God bless you. Bless you. Look at your accounting. A bad career pops in. So, and then the last thing of cash, what they're going to turn into cash and what they're going to sell. Once again, this is either a retail or a wholesaler because they have a single inventory. So the inventory account is $85,300. Which gives us total current assets of $151,600. Questions on the current asset section? No? All right, long-term investments. They have two long-term investments. It tells you in here that they have an affiliate. So this is a subsidiary. It could be wholly owned or not. You wouldn't really know until you got to the stockholders' equity section. But it has an affiliate that it has invested $30,000 in. So investment. At cost, $30,000. Now this next one, can anybody pick? You know from the template that there's a second long-term investment. Any guesses from that list that's on there? No. Long-term investment. So this is an asset of some sort. Bond sinking fund is it precisely. What companies traditionally do is they put aside some money each year and an investment account of some sort to earn a little bit of interest on it or something along those lines. That they will use that money to eventually retire the bonds, which in this case the bonds, well it says in here the face value matures on December 31st, 2015. So in 2 years' time, they've got a bond that is going to come due, so they have saved up $12,500 towards that eventual retirement. And so what will happen next year with this bond sinking fund? It'll go up to a current asset because next year the bond will not be a long-term liability. It will become due and payable within the next 12 months. And so it will come up into current liabilities, and the related bond sinking fund will then come up into the, and it will be listed right under cash, because at that point it's a marketable security that is highly liquid. All right, so total long-term investments equals $42,500. And then they just have a line for property, plant, and equipment. It doesn't break it down or into land, buildings, equipment, delivery trucks, and such. So this one, relatively straightforward. Property, plant, and equipment, $296,700. And then less its related contra asset account, accumulated depreciation. So that was 109,300. So the net of book value, which is the total for property, plant, and equipment, is 187,400. You then add up all of the current assets, the long-term investments, and the property, plant, and equipment, and you get total assets of $381,500. All right? Okay, current liabilities, everything that is due and payable in the next 12 months. So what do we have here? We have accounts payable. Income taxes payable. And then the miscellaneous. Because it tells you that it was a current payable. So 44,200 in accounts payable, 19,700 in income taxes payable, and 6,800 in the miscellaneous. So that gives us
What shortcut are you using to get the equal sum function?
if you hold down the Alt key and you hit the plus equal sign. So you hold down the Alt key and hit plus equals, it does a sum, and then it assumes, because this last time it went up here and highlighted, and then I just got to move it over and highlight these. And when I did the Alt equals here, it just noticed that one, but left the first one out, so I had to readjust that one. So oftentimes, if you got in, commonly when you're totaling a column, it's a continuous line of numbers, so that when you hit that Alt, it goes to the top of the column. And it is smart because if you total a column that has a text in it, it assumes you want to count it rather than sum it, which can be frustrating because sometimes you've got a text in there by accident and you defaulted to count. You've got to figure out why you defaulted to count. So it's Then in here, it tells you in the other information down here that the long-term liabilities, which it gives you in the list at $91,000 book value, it's broken down between this $36,000 face value bonds that mature in 2 years' time, and they have a bond discount contra of $1,000, so that book value was $35,000. And then there's $48,000 bonds that mature in 6 years' times, and they have a premium. So that's an adjunct liability account, adds up, so that brings that to $49,800. And then that's the one whose retirement is being funded by the sinking fund. And then lastly, there's a 13% note payable that has $6,200 face value that doesn't mature until January 1, 2016. So that makes up the $91,000 of long-term liabilities. So those three types of debt instruments make up this $91,000. So that gives us total liabilities of $161,700. Contributed capital, this also is, if you go down to number 8, it says they have common stock, a $10 par value, 10,000 shares authorized and 1,000 shares issued at a price of $13 a share. So what you need to do with that is you need to compute how much goes into the par account, common stock, and how much goes into additional paid-in capital on par, because it's not up here in your, oh yeah, it is. It's up there in the 80,000, so you don't contribute. So the preferred stock has a $50 par value. 2,000 shares were authorized with 140 shares issued at a price of $55 a share. So they have a total of 640 shares issued at year end. And so that's the preferred stock account of $32,000. Go ahead.
I just kind of want to be sure about this, but I guess for the sake of this problem, it doesn't really matter. What matters more is how many shares were issued, not how many shares were authorized, right?
Yeah, but traditionally, and I'm going to type it out because it's not in here, when you look at a balance sheet of a publicly traded company, it tells you how much the par value is. It also tells you in the balance sheet how many shares are authorized, how many shares are issued, and how many shares are outstanding. And in this case, there is no treasury stock, so the amount for common stock and preferred, the issued and outstanding are the same. Okay? So this one, preferred stock, has 2,000 shares authorized. With 640 shares issued and outstanding. And I know that's not going to fit in there, but yeah, it kind of does. All right? So 640 shares at $50 a piece is $32,000. All right? Common stock has a $10 par, and it tells you in the other information in item 8 that there are 10,000 shares authorized and 8,000 shares issued and outstanding. So there are 3 numbers associated with stock. How many of this particular class of stock has the board of directors authorized for sale? That's as That's as many shares that could ever have been sold of this class of stock. How many have you actually sold? And then lastly, how many are still being circulated in the marketplace? Those three numbers may not always be the same. Go ahead.
So then what do you do with like the, still on problem number 8, but at the very end, it says, during 2013 at a price of $13 per share, resulting in 8,000 shares issued at year end.
Right, that's the total. That's what I have, 8,000 issued and outstanding. All it's doing is it's telling you, because if you look forward to the requirements, it's asking you to not only do the classified balance sheet, but it's asking you to do the statement of stockholders' equity, which is what I'm going to do next. Okay? And that information as to how many shares you issued this year at what price is going to be used in that statement. All right? So, but just finishing up the balance sheet. So you have two paid-in capital accounts. Preferred stock and common stock. So the preferred stock has preferred is 3,200, and the common stock has 20,000. So that's 135,200 in total contributed capital. Retained earnings is given to us at 84,600. So total stockholders' equity is 219,700. Total liabilities plus stockholders' equity is then the exact same as we have for total assets, 381,500. All right. So these are, for the statement of shareholders' equity, these are all the sections that are in the shareholders' equity section. So we have our 4 contributed capital accounts, preferred stock, common stock, and then the additional paid-in capital on both. And then we have retained earnings. And so we're going to have to back into the earlier numbers, because all it's doing is it's telling us here in our list as to what the ending balances are. So we know that preferred stock is 32,000. We know that 80,000 is in common stock. We have 3,200 in additional paid-in capital on preferred, and we got 20,000 on. And it is not telling us anywhere in the other notes as to what the beginning balances were. And then we had 84,600 for a total of 219,800. Once I drop the numbers in, it will automatically fill in all this. Okay. So we have preferred stock issued. And it tells us in here on number 8, on number 9, that 140 shares were issued during 2013 at $55 a share. So at $55 a share, 140 shares is 7,000 of at par. Okay, so that's 50 of the $55, and that leaves another 700 of additional paid-in capital. So this minus that gives us a beginning balance of 2,500. And that'll be the same here. So just subtracting one from the other. Common stock issued. Number 8, we issued 1,000 shares at a price of 13. So at a price of 13, at 1,000 shares is $10,000 at $10 par, and then another 3,000 of additional paid-in capital. So that same is 17,000. And then net income, and then what's the last line? What else affects retained earnings? That's the only block that we haven't filled in yet. Dividends, less dividends paid. And so net income, it tells us in the problem in the additional information, number 11 was 50,500 and 21,000 of dividends. So this is this plus this plus that. Ending balance. This is going to be minus that. Okay. So what you have to do is you need to take the ending balance of 84,600. You need to add back the dividends of 21,000 and then subtract the net income of 50,000, and that will give you the 55,100 of beginning retained earnings. So you just had to back into all that. Questions on this one? No? Makes
Yeah,
perfect sense.
I think I have a question, sorry.
Yeah.
So we have the common stock, the way we got $10,000 for common stock, we did 1,000 shares sold.
At $10 par.
What happened to the 13? Oh, okay.
Anything over par goes into additional paid-in capital on common stock. Just like with the preferred stock, we sold 140 shares at a $50 par, so that's the 7,000. But the purchase price of that preferred stock was actually $55. So the excess above par is the $700. All right? Questions on this? All right, on Wednesday, we'll be reviewing for the first midterm. So you don't want to miss that.